Welcome back to Morning Markets on Monday, the 10th of January. On screen, we can see the key market moves from Friday. The key takeaways: markets experienced a mild pullback in equities, global equities, marginally negative on the day, led by the US technology sector. Energy and material companies in the UK provided supportive returns, as did Chinese indices within the emerging markets. Value as an investment style outperformed growth by just over 1.1%. Yields available on government debt moved higher, and the US dollar weakened relative to a basket of international currencies. So in terms of the key market events, what was really driving those moves? On Friday, investors and market participants were paying close attention to the US non-farm payrolls data in the States. The report demonstrated 199,000 people found work in December 2021 in the US. And from a standalone perspective, this is very encouraging. It's demonstrating the continued improvement in labour market health and that move closer towards those objectives of the Federal Reserve around full employment levels. However, why did markets react the way in which they did? The print was behind the expectation. So the expectation was for around 450,000 jobs to be created. And that was actually anticipated to be on the cautious side, given the very strong ADP report which we experienced earlier in the week. An important aspect of the report demonstrated the unemployment rate came down from 4.2% to 3.9%, and wages actually increased 0.6% month on month. What was evident is demand for workers in what is a very vibrant economy in the US is still outstripping supply. The Fed minutes from last week demonstrated that they've started to move sooner than initially guided around the pathway of normalizing monetary policy, and as they move closer to those key objectives around full employment, and inflation levels. After the report on Friday, investors reappraised expectations around that pathway of normalization of monetary policy, pushing bond yields higher. The higher yields represent higher implied financing costs for businesses, which are more sensitive to earnings expectations. So the key example there being the US technology and consumer discretionary space, which is more sensitive to earnings expectations. So higher yields present higher financing costs in that respect. As we look towards the week ahead, a few examples of items which we will be discussing. In the US, we'll be discussing the inflation report for December. We'll be looking at the consumer sentiment index. In Europe, we'll be looking at Germany's preliminary estimate GDP report for the year 2021, as well as the Eurozone's unemployment reports. In Asia, in China, we'll be looking at inflation data and international trade data for December, and in Japan, a survey of leading economic indicators, giving a sense of growth expectations there. Thank you very much for watching, and we look forward to bringing you up to date tomorrow here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.